This is how it's impossible for me not to become a millionaire. Hi, welcome back guys. Today I'm going to go through how it's going to be completely impossible for me not to become a millionaire. Following the stock market. So I'm going to go through a few scenarios of how I'm going to do it, and I'll go through a few scenarios of how you can do it too, how easy it is, providing the stock market does what it has done historically, which obviously there's no guarantee of, and how you can get to that point very passively, but with time. The main thing is having the patience and the time. But first, I'm going to go through a couple of bits about how the stock market is just very scary place, and I think it's because there's so much uncertainty, and there's so many different reports and different figures in the stock market. On average returns this much a year or this much a year. It does include inflation, doesn't account for inflation, doesn't include dividends, does include dividends. There's so many different scenarios, there's so many different reports out there that it's a very scary thing not knowing exactly what you're going to be returning. And of course the stock market has never historically, or very rarely historically, returns that average figure. It's either huge figures or minus figures, you know, and that's just very daunting for a lot of people. So I'm going to jump on the laptop, I'm going to go through kind of what I mean really, and look at different websites and things and find all these different reports just to kind of demonstrate what I mean, and how it can be quite a daunting place when you get all these different, you don't know who to believe, and there's all these different reports out. By the way, you shouldn't believe anything I say, but I'm going to just give you and demonstrate for you exactly kind of what I mean, and then we'll jump out and play around with a compound interest calculator and go through exactly how I'm going to achieve the millionaire status, and when I'm going to achieve it, and when you could start looking to achieve the millionaire status. Now this isn't going to be for everyone. I'm not saying this is easy, because obviously you need to be investing your money. So you need to be earning money in the first place, and not everyone's in a position to be earning the kind of money you might need to be putting into the stock market. So just a bit of a disclaimer, this is not going to be for everybody. Not everybody is going to be able to do this, but I just want to demonstrate how you can do it and how you can harness the power of the stock market. So let's jump into the computer and I'll show you exactly what I mean in terms of different reports and different figures that are out there. Well guys, here we are, jumped into the computer. So I've just done a tiny bit of homework just on a few different websites. We've got Wikipedia, we've got Investopedia, Macro Trends and Slick Charts. They just happen to be at the top of the searches that I did online. So I just want to outline what I kind of mean by there's so many different reports out there and so many different figures batting around. So I've just gone from 1970 up to 2019. That one's working the other way. Wikipedia will tell us, and they work it out on a median, but I'm working it out on a mean average, which is tally them all up, divide them by the number of number of units, I guess, number of years. So we've got including without dividend and with dividends, and these are outrageous figures. So obviously that's not including any adjusting for inflation. Clearly it can't be, because we've got nearly 16% and 18.5% with dividends. So, and that's on Wikipedia. We've got Investopedia here with dividend reinvestment, or with dividends coming in, 12.5. So if you think inflation since 1960 is an average, bearing in mind 1975 inflation was 24% or something outrageous like that, but the average inflation, you're looking 2-3% normally. I think an average from 1960 is actually around 5%, but you had some crazy figures in 1970, so you're looking 2-3%. So take that off that and you're down a year sort of 9-10%, which means your sevens without dividends, it does kind of make sense, and I'll show you that in a second when I've googled it. So Just quickly, so macro trends and slick charts with dividends and price only. So we've got 8.75 as price only. So if you take inflation off that, really you'd be looking kind of 6, maybe 6.5, up to 7 at a push. And we've got with dividends at 12.01, and that's the most accurate, those two, I guess, or certainly the most similar. So if I go, I've just Googled exactly that, total return of the stock market. The stock market has historically returned an average of 10%. So that's such a round number. There's no exact figures here. It's just 10%. It's a round. Look, right. Let me just highlight that section. Is about 10%. And that's what people fear the stock market is because there's no certainty about it. There's no definitive figures, and even the homework I've done with the top kind of 4 websites when I Googled it to look on Investopedia, and there's a few here. So we've got average stock market return. Where does 7% come from? Is around 7.96 between 1957 and 2018. Of course, it also depends on how far back they're going as well, so there's just too much uncertainty about it. Anyway, rant over. I just wanted to rant about the fact that that's, I think, why people have a lot of fear over the stock market, is just the fact that there's no definitive figures, there's no certainty as to exactly what it should be returning on an average basis. You've got, it could be this, it could be that. Is it with dividends? Is it without? Is that adjusted for inflation or not? Anyway. Rant over. I just wanted to quickly kind of show you with complete transparency. If you Google it, this is what you get. You get some 7s, you get some 8s, you get some 10s. Is that with or without it? It's too much uncertainty. So, but I'll throw you back out there and we'll go through a compound interest calculator, which you need to get your hands on. Alright guys, so hopefully you kind of understand what I mean in terms of the figures are just so skewed and there's no actually certainty as to the exact figure that the stock market has returned over the years. But on an average, we can kind of be guided by this and look at a conservative figure and then work on that. So I'm going to jump into my compound interest calculator that I have on my phone here, and I'm going to run you through my calculations and how I'm going to achieve a millionaire status. So I'm going to go straight into it here. So I'll put this up on the screen just there so you can see what I'm doing. So my principal balance at the moment is around £40,000. I'm going to go conservative with the stock market return. I invest in quite high dividend paying stocks, but let's go for a nice 7%. I'm investing quite heavily into the stock market on a monthly basis, but let's say I'm putting in £1,000 straight into the stock market, paying myself first and living off whatever I've got left. And I'm now 30, so I'd like to be able to get this done by the time I'm 55, let's say. I'm not 30, I'm 31, but let's pretend I'm 30, right? So I want to get this done by the time I'm 55, which is 25 years. So we're going to input that there and go done. And as you can see, if I just stick to what I'm doing on an average return of 7%, which would be more like 10% with dividends, my end balance is £1,036,317.85. Don't forget the 85p, it's important. So that's what this is basic figures. If I can commit to let's say I can't quite commit to £1,000 every single month, and I can only get up to £750 each month on average. Bearing in mind I'm doubling that at the moment or more. So on average, you know, if I can only get into the stock market 750 because a few months I can't do anything, and I'm going to do it for 30 years. So when I'm 60, retirement age is 65, 66, I don't even know. When I'm 60 and I'm retiring, if I calculate that on a principal balance of 40,000, I'm ending up with 1.233 million. So this is, and you can just play with one of these compound calculators. I encourage you to play around with one of these compound interest calculators because they're so compelling. Let's go through a scenario for you guys now, and let's say you're a little bit younger and you're starting to watch these sort of videos and you're quite getting into investing in your 20, and you're starting with zero, you've got nothing. So let's keep the interest at 7% average return in the stock market. And let's say that you want to retire a millionaire, but you're 20 years old, so you've got 40 years to get it done. Well, you don't, you're for about 45, but let's work on 40. Let's get you retiring early. I believe you need to be putting into the stock market something in the region of 250 to 300 pounds a month. Let's say on average over the course of your lifetime, and you might not be able to get this much money into the stock market when you're in your 20s because you've got stuff going on, but when you get into your 30s and you're earning more, maybe you can, and then your 40s and your 50s it ramps back a bit. Let's just say, for example, you're getting 300 pounds into the stock market every single month without fail at a 7% return. So 40 years time, you'll have 783,000. So let's go something a bit different. Let's ramp that up to 350. And this is the beauty of one of these compound interest calculators. You can do this yourself. So you can literally just go, nope, 350 is not enough. Is 375 pounds a month enough? Oh, nearly. Is 385 pounds a month enough? Yes, it is. So you can just play around with these, and so you could get, if you're doing this in your 20s and you start investing, well, by the time you get to 60 and you live your life in the normal way, nothing special, nothing outrageous, you're just earning enough to get 385 pounds a month into the stock market consistently every single month, then you will end up on the average of 7% return in the stock market. And if you include dividends in that, let's go 7% as an average price return, and the S&P will return roughly 2% in dividends, or you buy individual stocks as well, which return a 6% dividend in this one, or a 3% in that one, and a 5% in that one. Let's go for 9% because you've got your average return plus 2% in dividends across the board. The figures are compelling. So 1.78 million, which means if you got 9%, you can come down to, no, way less than that. So if you start in your, you could, if you're investing in an index fund that returns a 2% dividend yield plus 7% return on average across the board, if history repeats itself, which it often does, and you invest in the odd high dividend paying stock here and there, you know, you've got some Procter & Gamble, Johnson & Johnson, 3M, and some really good quality dividend paying stocks, so you can return your 9% a year, you'd have to put £250 into the stock market over the course of that time. Let's go another extreme example. You're going to do it for 45 years, so you're literally going to retire and you're going to live on this, but you can only get £200 into the, less than that. I mean, this is absurd. I hope you can see all this on here. 180, 150. You can literally commit £150 a month to the stock market on a 9% return. So stock market price return, S&P 500 price return, plus high dividend paying stocks and shares, or ETFs, high dividend paying ETFs, and you're going to end up with 1,093,000 from just £150 per month. So that's how compelling this is. I just wanted to get a compound interest calculator up there. I want you to go away and play with a compound interest calculator. There's no hiding or getting away from the fact that this takes time to do, a long time. It's not going to happen overnight. But the fact is, if you do this, and you're committed to it and you're consistent, it's almost impossible not to become a millionaire. Now, with inflation and the fact that when I'm 60 years old in 30 years time, what is £1 million going to get me? Well, it might buy me a studio flat somewhere in this area. So I'm not saying that this is you're gonna be able to live out your dream life when you're 50, 60 because you've done exactly this. All I'm saying is it's quite compelling what the power of compound interest does, and the stock market is a perfect vehicle in which to do that. So look, I hope that's been helpful, guys. I know it's been a bit of a rambly one again. If you're new here to the channel, subscribe. because I'll be doing videos that hopefully will provide value to you guys on a weekly basis. Like the video and share it with your friends if you feel like somebody else needs to see this, and comment below what you're getting into. Stocks, ETFs, other investments, anything at all, anything money related, just put it down in the comments and we'll have a discussion about it. But until next time, keep putting your money away into the stock market, and I'll catch you guys in the next video.